Hi, in this video we're going to look at some high yield investment trusts that you can research further and possibly put into your portfolio. And what I've done here is I've gone to the AJ Bell website and their investment trust quick rank, and I've downloaded the data into a Google Sheet and then built my own database to filter for the best high yielding investment trusts. So first of all, I filtered on sector to ignore venture capital. I filtered on currency, so I've just got GBP. Filtered on dividend yield and sorted by dividend yield. I've removed expense ratio if it's more than 3. I've removed market cap if it's less than 50 million, because the small investment trusts are often quite poorly managed, and if it's not popular, it's generally not worth considering. I've removed those with high gearing, and then I've got some price performance here. So I'm going to go through the list and explain a bit about some of these. So the first one up is Crystal Amber. This one is actually being wound down, so we can ignore that one. And the problem with dividend yields is that they are historic, so it's looking backwards as to what's happened over the last 12 months, and it's not looking forwards, so the future can be quite different. VPC Specialty Lending is an interesting one, yield 9.6%, and it has had positive returns over 3 and 5 years. It's lending directly to companies, which is higher risk than buying company bonds. So if you're prepared to take on that risk, you might be well rewarded, but you're going to have to research quite a bit into the investment trust to see if it's worthwhile for you. Next one is a bit of an odd one. If it's on a discount of 46% and everyone can see that discount, then I tend to just walk away. And if I'm going to invest in something, I like to really drill down into it so I know things that most other people don't know, and that's then what's giving me my edge. Next one up is CQS New City High Yield Fund. This one is on a premium, so it's maybe not quite the right time to buy it. It's got a yield of 8.8%. It is well respected, and again it's got positive returns over 3 and 5 years. Then we've got a couple that pay income on a monthly basis, if that's of interest to you. One is on a discount, this NB Global Monthly Income. One is on a premium, so I would start researching the one on a discount first, because the returns over 3 and 5 years largely similar. EJF Investments, that looks at debt relating to banks and insurance companies in the US, so it's quite kind of specialized, quite a high discount, so yeah, maybe there's a bit of risk there. Henderson Far East Income, so this is an interesting one, and because I do like equities, I like investing in companies that can grow, and then you get paid a dividend while you're waiting for the growth to come. And we can see that, yeah, it has actually had some growth, so that's not bad. And then what I can do is I can click here, and then it'll pop up with the AJ Bell website and all the information about the investment trust. So here we've got the top 10 holdings, which are pretty solid. It's not necessarily overly concentrated as well, so yeah, that's looking potential for further research. Sequoia Economic Infrastructure, that is lending to infrastructure companies. It's quite a large fund, so that gives me some confidence that it is fairly robust. Don't know so much about the rest ones. Apax Global Alpha, that one's taken a bit of a battering recently, so it's possible you can pick up a bargain. Some private equity invest in more mature businesses that are generating cash and paying dividends. This one aims to pay out 5% of net asset value each year, so I think that one is worth looking at in more detail. Abrdn Equity Income Trust, so this one 6.5% yield. What I've done is I've pulled up some information here, just went to the news section, and it says that companies increased dividends. I think this 22nd year of dividend increases. So it's a dividend hero and it's on a decent yield. It's aiming to pay a dividend of at least 22.8% per pence in the coming financial year. So that's looking really good. I'll research it further, but yeah, that's looking like a nice one if you want some passive income and no drama. Then we've got Gore Street Energy Storage. I do like energy storage because generally there isn't enough of it about, and when we look at it here we find out that yeah, it's been expanding a bit. Net asset value is rising. Chairman bought 220,000 shares, so that's not bad. So that's looking quite interesting, and over 3 years the growth has been quite impressive. JP Morgan Japan, small cap, that one aims to pay out 4% of net asset value, so that dividend will decline in time, so that's probably not necessarily one to look at. European Assets Trust, that one is here it actually says it's recently cut the dividend, so it's actually not quite as high as maybe I'm thinking, but it is on a discount. Unfortunately the holdings never really heard of these, so yeah, that's a possible one. Now as we come further down, these solar funds are quite interesting. I definitely prefer solar to wind, but with solar it depends on the technology behind it, whether there's subsidies on the contracts that are involved, and again whether it's the latest technology or whether it's a bit older stuff that needs to be replaced. But actually the returns, price returns, have been pretty good, so I think either of these two are worth looking at. You know, they have been on premiums, but with some of the energy taxes coming in and the rising interest rates, they've fallen now to a discount. Blackrock World Mining, that's a favourite of many, and it's a large, well-respected investment trust. If you buy it now, maybe you're a bit late in the cycle, but I think people are moving from oil and gas into mining, so that's still interesting. UK Commercial Property REIT are on a whopping 41.8% discount to net asset value, but the net asset value will lag, and it's mainly offices, and it's just a bit of a punt on whether businesses will go back to using offices and stop people working from home. Latin America, that is, it's a bit up and down in terms of the returns. Generally there are some high yielding resource based companies there. You may be better off with Blackrock World Mining instead though. And then right down at the bottom we've got Linsell Train yielding 5.1%. So it's got the investment business and then a portfolio as well, roughly 50-50 between the two, and ideally it can maintain the dividend because it's got the investment business that's throwing off cash as well as the portfolio. So hopefully it's another one where you can get rewarded with a decent dividend while you're waiting for the price to grow. So I'll put a link in the description as to how you can get hold of this file. There's instructions there as to how it all works, and then you can use it to filter, I mean not just for dividend yields, you can filter on price returns, all kinds of things. You've got all the UK quoted investment trusts in a database and you can play around with it with your heart's content. So I hope you've liked the video. Give it a thumbs up, subscribe to the channel, ring the bell, and I'll see you next time.